guess I never talk about this publicly because I'm not sure where it really fits in my content, but I just raised for a syndication. I was a general partner on a 64 unit in Cleveland, and it was a very interesting experience to be on like the syndication side instead of just the debt raising side.
Well, we're here now. Let's talk about it a little bit. Let's crack that nut. So, syndication, maybe just give a little synopsis of what that is, and then what your role it was with getting that deal done.
Capital raiser. It's what I'm good at. But I went to Bigger Pockets conference. I bumped into somebody who I had a casual conversation with, and she was just getting into syndications. And I casually said, well, if you need anyone to help with capital raising, like let me know. And she actually took it really seriously. I set up a call the next week, and within the week after that, I was a general partner in the syndication, which is really cool, and I raised a bunch of money for them. And it's been an interesting experience from like the asset management side, the document side of things, the legal side of things. It's just cool to be able to peek into someone else's business, and to do that, I guess I earned that right by raising capital for them. But to me, it was like a small task to be able to have a real inside look at someone's business.
That's amazing. I mean, to go from, raising money for your specific deals to raising money from your partnerships to now raising money for a syndication for, a 64 unit multifamily apartment building. So those levels are just amazing to accomplish in such a short period of time. So for someone listening now that maybe sees themselves or wants to do that down the road, but maybe is looking to continue to build their portfolio and start raising money, what would be, I think most people kind of look at it and go, well, what do I even offer someone to ask them to give me some money? Like if someone's looking to raise money for a down payment, maybe some renovation costs, like kind of what is even the going kind of rate out there for private capital, since you've been so good at raising it?
I think it depends on your level of experience and the amount of people who want to invest in your deals. So early on, I was offering 12% interest, no points, no fees. So it was still cheaper than hard money, because hard money is oftentimes 1 or 2 or 3 points plus 12% plus a bunch of origination fees and closing costs. And so I remember the last hard money deal, I dug up the settlement statement, and it was like $10,000 of fees for like a $200,000 house. It was absurd. So private money, I was like at 12% flat, no fees is pretty good. So that's what I started at when I did not have that many investors. Gradually, I moved it down, and my, I guess, going rate is about 9%, no fees, no points. So it is pretty good. I think it's better than some people are getting in the stock market right now with it on a roller coaster. And a lot of people like that it's backed by real estate. And so, and it's also based off of a relationship instead of based off of the stock market, whatever it does. And so people do like that stability, the constant cash flow, and being able to call me and ask what's going on with their project instead of like looking at the stock market and seeing what the price of the day is.
Exactly. Now, are you paying that out on a monthly basis? Is that on like at the end of the project when you're refinancing? Is that kind of when that percentage is getting paid out to someone?
So I used to do monthly a lot, but I was just talking to one of my friends who does like $1 million flips. And she was saying that she paid monthly too. And if you can imagine, if you have $5 million flips going on at 10%, your annual payment or your monthly payment is like absurd, like $10,000, $20,000 a month. And it's really difficult to manage cash flow, because if you didn't raise money to cover the monthly payment, which you probably didn't do, you're having to come out of your pocket for monthly payments. And so we did that for a while, learned from our mistakes, and now we pay at refinance, and mostly just to manage the cash flow.
Hmm.
That makes
So
a lot of sense. So go ahead, James.
no, I was going to say, have you had any pushback from your investors? Because, I know I can imagine that somebody who's just getting into it they're kind of expecting the monthly passive income. I mean, that's probably part of the reason, but are most people that are doing the investments with you, are they okay with waiting that period of time before they get paid?
So our terms are 9 months, but we usually repay people around 6 months. And so I feel like 6 months of term is really not that long to wait for their payment. I have other people, like my longest private money debt lender is 3 years and I pay annually. And so on the equity side, we pay quarterly. And so I think there's different models. If you don't have very many options with lenders, I think you might have to concede certain things like paying monthly. And sometimes we do if it's a good relationship. But right now, it's like I usually send out a deal and get it funded within 24 hours. And there's 5 or 6 or 7 people who want to invest in it. And so, because I have so much leverage, I have the deal, I have the relationships, I think it's gotten a lot easier to raise capital.
All right. So basically, for everyone listening out there, you borrow 100 grand from someone for a deal, and 6 months later, you're paying them back 109,000. Or is that
Yeah.
is that the 9% on the total amount?
Yeah. So
Prorated.
6 months later, I pay them back 100,400 and
Yeah, 45 basically. So you're paying them. Yeah.
Yeah.
So okay. So that 9% is over 12 months.
Yes.
So you're saying, hey, I'm giving you a 9% return over 12 months, but you're paying them back in 6. So that's half of the 9%. So that's 4.5, basically. It's only the
Kind of.
9 if they take the whole thing.
Annually. So it's like usually we try to roll a lot of our investors' money into the next deal. And that's kind of the appeal, is that if they take their money and then put it back in their bank account, then they did only get 4.5% return, and now sitting in their bank account losing money from inflation. And so hopefully the experience is good enough where they want to reinvest their money. Or sometimes investors also invest to, I guess, learn a little bit about the process and get comfortable with real estate. And then after 6 months or after the second deal, they'll take back their money and they'll go reinvest by themselves. So kind of 50-50 what happens.
That makes a lot of sense. And I really just want to hone it down for the listeners out there on kind of how it works, what a going rate out there for money is on a deal. You can start at 12, and then as you build that relationship, 2 or 3 deals later, you're starting to work that number down with your pool. So basically what you're saying is you guys find a deal, you have an email list that you're sending it out to, and within 24 hours, because of the relationships you've built, because of your brand and everything else, you're putting out a deal sheet. Hey, this is what the deal is, this is the return, does anyone want to invest? Bam, within a day, you have the funds, and you're raising what it sounds like is 100% of the funds for the deal and the renovation.
Yes.
And the
So
renovation.
I would say this is not like, the process has gotten significantly easier the more that I've done it and the bigger my brand has gotten, but it didn't originally start that way. The process looks a lot different today than it did in the beginning. But I do have, if your listeners want, on my website, like a free PDF download of the presentation that I use to send out to private money lenders if they're trying to pitch a deal. Free download, latesandlisas.com. I think it's a good thing that a lot of people, I was, again, the flipper who I talked to actually used it the other day. I think she raised $400,000 in a couple hours. And I was like, that's awesome. But from like a logistical perspective, for people beginning, not like advanced capital raisers, basically it just takes a bunch of conversations. And so whether it's like your mom or your dad or your coworkers or someone, you never know what kind of people are looking for returns on their money. So I think viewing it as providing an opportunity instead of asking someone for money, which a lot of people get scared of, you're actually providing a return, an opportunity for them to build wealth. And then from there, you basically, if they agree to it, you go out. I like to go out and find a deal, bring it back. And then if they say yes, then the attorney draws up all the documents, defines what the terms are. And then I like to give a mortgage as collateral for the investment. And basically the closing attorney handles all the paperwork for you, which is people's like biggest fears. What paperwork do I use? The lawyer handles everything.
So how many investors are you bringing in on a typical deal? Or do you just have a handful, or is it maybe like small amounts from a lot of people?
Just one. So I like to keep things as easy as possible. It depends, like for the syndication, obviously there was a lot of bunch of deals, but the average deal we're buying right now is somewhere between 60 and $70,000, sometimes 60 to $90,000, let's say. And our renovations are anywhere from like 10 to $30,000. And so all in, we're usually underneath $150,000. And so we'll look for one person who has $150,000 so that we can give a mortgage to that person. If you're comprised of like 10 $10,000 investors, one, it's like a logistical nightmare, an administrative nightmare to keep track of everybody. And then you have people emailing you. Usually people who have not very much money are the people who are the most concerned about their money. So they'll be emailing you all the time. And it just gets complicated with like, you'd have to give like 10 personal guarantees for $10,000 instead of actually giving a mortgage as collateral.